Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the related markets that have an impact on the precious metals prices. Without further ado, Miles, let's jump right into gold and the recent price action over the last 7 days.
We're looking at a short-term bounce, little reversal bounce in gold back up into the 1950s, coming off of a high that just scraped 2,000, came just below 2,000 with a reversal back down to around 1940. So we're back up around 1955. Gold chart's making a pretty nice, tight, rising trading range with higher highs and higher lows. Being that we just came into the bottom of that range, I would like to see gold continue up, push up. The next move up has to get us above 2,000. And once I think we break through that level, I think we're off to the races at that point. We're looking at our third touch up around 2,100. And when we get up there, this most recent time, we had a very limited reversal back down here when we hit it back at the beginning of March. Very limited reversal back down. If we do continue to climb up and retest that all-time high again, I don't think there's a lot really stopping it at that point from just going ahead and giving us a breakout move to new higher high ground.
Well, may it be. And you're not the only one thinking that there's a chance of that happening. We're starting to see a consensus now, Miles. I don't know if you've been noticing it, but even big banks and Wall Streeters are thinking that. Bank of America is saying that gold's going to hit a record high this year still, yet to occur. Wells Fargo's calling for $2,100 an ounce, and they're not worried about this little pullback even. To support your analysis, the Elliott Wave Theory guys feel like that 1945 is a really key support also, which is right where we bounced after that big pullback on some short-term good news economically. But all that to be said, yeah, higher highs, higher lows, we'll take that. That's an upward trend. What are you seeing in terms of the silver right now?
Moving over to silver, we pointed out last week that silver had been in this compressing wedge sort of down after the last time. It made a run back towards 30, but didn't quite make it, got up to 27, and then kind of compressed downwards and a breakout move at the beginning of April. Well, it continued up to 26.50, so not quite the early March highs, but probably stair-stepping that direction. And then we quickly reversed back down, and like I like to say all the time, old highs become new lows. And you can see on the chart here that we appear to possibly be putting our foot firmly on this kind of $25 mark that we had this breakout pricing at. And just like gold, it looks like we're starting to reverse at this point. So in gold, in silver, if we're going to see continuations down, it's going to happen like by the time the show goes live tomorrow. I mean, we're not going to see a stall here. You're going to see the pricing either begin to climb or continue down at this point. I don't see us hanging around $25 on silver for very long.
Yeah, I really don't either. It's still undervalued. It's still trailing gold, not only this year a little bit. They're pretty even this year, but as far as where we were this time last year, silver has underperformed gold. That ratio's at 77.5 to 1. It's up a point this week. And so that tells us that silver has a little more upside potential. Plus, remember, it's still 50% from its all-time high. Gold is about 8% from its all-time high. There's also a lot of expectation for silver industrial demand, that as things continue to heat up economically, if they do, you should potentially have a 5% rise in demand just from a physical, industrial, and technological use standpoint. So we'll see if that doesn't help that ratio to narrow and have silver outperform in the second half of the year. We'd really love to see that tighten. So let's cover platinum too. Obviously, it's been sort of lagging and, for lack of a better term, disappointing as of late. Do you see anything changing there?
Platinum, obviously lackluster, less interesting, especially in a market where concern seems to be the driving motivation in, say, the gold market, which is trying very hard to push towards all-time highs. Silver, which tends to be the sister metal to gold, tends to follow the same kind of pattern gold does, just a little bit later and a little bit faster, kind of like your younger brother did at home, right? He wants to do exactly what older brother did. He just does it with way more gusto. Platinum, on the other hand, yeah, you're absolutely right. It's been a little bit lackluster. I mean, we're still bouncing around some pretty significant bottoms in the high 900s. We haven't seen the types of returns in platinum yet, percentage-wise, that you have seen in gold, that we are starting to see in silver, which is why that's the thing I'm interested in. There's no way when you have a broad precious metals move alongside some of the other commodities that were going up, that something like platinum, which a pretty large percentage of comes out of a little country called Russia, which might have sanctions on it right now, the availability of platinum supply is going to dry up, and it's going to be difficult to replace some of those availabilities. So why platinum hasn't begun to move yet, I'm not entirely sure. It's also the thing that I'm most interested in putting my personal money into right now, because I think when it does finally play catch up, you're going to be glad you added that into your portfolio. So
yeah, it'll go back to a parity with gold at some point. It's going to equal the gold price.
And I think beyond. Yeah.
Yes. Yep. I totally agree.
So platinum's still under 1,000. We did have a pop up above 1,987 today. Does look like it's starting to stair step up a little bit, but we'll just have to see. I don't really want to give any predictions on it because I want to see something that's going to give us clear breakout trajectory.
Well, it's very economically sensitive, so we need to see some of those numbers turn. Very dollar sensitive, as are all three of them. So let's transition to the dollar here a little bit. It's at a turning point, quote unquote, according to Bond King Jeff Gundlach. And the dollar's at a multi-year high right now. And that's, to me, very encouraging because of where we see the metals prices in relation to a multi-year high in the US dollar. Are we going to 102, 103? Where does this thing stop?
I'm not entirely sure where it stops. I think short term, we should see a reversal here in the US dollar because we're looking at the dollar getting to those kind of panic liquidation prices back in 2020, March and April of 2020, and then May before it fell off a cliff for the next year. So solid breakout move. We looked at a couple trading channels in the dollar, both going back to March and April of 2020. You had this compression zone. It broke below it. We had a long decline. We've come back up to it, tested that compression zone for a while. We had this great breakout, pushed us up above 100. In fact, we're still above 100, even though we've come back down a little bit. So could we see the dollar relatively go back to 103? And again, we're looking at the dollar index. I know this is big for Robert. Let's not forget that it's an index pegged against other currencies. Europe is having a couple problems right now. So it's not surprising that we're seeing both European flight capital as well as the equity market, which is also having a bit of a problem right now. Flight capital coming out of those markets going into the U.S. currency, which is a little bit more stable. Oh, and interest rates are up, which is going to at least make short-term Treasury bills much more appealing compared to some of the other liquidity options out there. So it's great that the dollar is doing well. The problem with the dollar doing well is why is it doing well and what else is hurting because of it? And that's what I'm more concerned about.
That's a great point. Tomorrow, the day that this show gets released, Fed Chairman Powell is set to speak. So he'll have two engagements, and we'll see
Thursday
if anything.
Powell.
A Thursday
Not
Powell
Wednesday
that's
Powell.
not an FOMC meeting.
Right.
So we'll see what he has to say. Usually from the podium, he's able to move markets. Now, which market is he going to move that has an impact on the gold price? Gold and silver tend to react rather than always just necessarily predict. So we'll see what happens there. But the Federal Reserve is trying to do something it's never accomplished before. So he's walking this fine line. And what they're trying to accomplish is reducing inflation a lot without significantly slowing the economy or raising unemployment. And even Janet Yellen, the U.S. Treasury Secretary, sees the risk of failure in that venture. She said, quote, "It will require skill and also good luck," unquote. So that doesn't
that's
bode
what you
well.
want.
No, we've already sort of locked in a recessionary period here in the near future. I would argue we're already in stagflation with this persistent inflation. The numbers aren't getting better yet in the inflation. And so during the past 80 years, the Fed's never lowered inflation as much as it's setting to do now. They're trying to lower it by 4 percentage points. But every time they've attempted to do something like that, they've caused a recession every time. So anxious to see what he says. To me, it goes back to that word you just used a few minutes ago, and that is concern. With concern, that usually tends to result from uncertainty, and that's when gold tends to do very well. Concern and uncertainty, those tend to be wins in the sales of the precious metals prices, on top of the fact that you've got these negative economic numbers coming in. And there's a whole lot of people that have been very happy with gold's 9% return year to date to the fact that they've already positioned in it. That's why you get out ahead of these things.
So that's going to do it this week on Golden Rule Radio. If you liked what you heard, hit the subscribe button, ring the bell. Head on over to our website at McElvaney.com. You can also find us on Twitter at ICA Gold or Facebook at McElvaney Financial. If you'd like to discuss your personal precious metals portfolio, make sure to give one of us a call at 800-525-9556. Thanks for listening and have a great week.